Hi everyone, hope you guys are all having a great day today. In today's video, I'm going to cover the whole entire market in terms of Dow Jones, NASDAQ, and S&P 500, including the economic calendar. I'm going to cover the whole entire week instead of day by day because it was a little bit too difficult to cover day by day in terms of schedule. And then I'm going to post these usually on the weekends because that way you can catch the Monday as well, leading up to the whole entire week. And then so basically cover the whole economic calendar plus the technical analysis portion and a couple more tidbits here and there. Also, I'm going to start a challenge. I'm pretty sure by Monday. I was kind of hinting at it a couple of videos here and there, trading $100 to $1 million in one year, not 1 month, 1 year. It sounds pretty much impossible. It is highly unlikely, but I think from the past 4 months, I've been pretty successful in terms of trading that I think I could potentially do it. So if you do want to be notified when I do that challenge and see basically the progress, consider subscribing and following so you'll be notified when I do. And we'll get to the video. So basically for the economic calendar, for the Monday, which already passed, which is today, at 10 a.m. we had factory orders coming out. And then on Tuesday, we have the election, by the way. So mind you, the election is on Tuesday. Tuesday, November 5th at 8:30 a.m. we have U.S. Trade deficit. At 9:45 a.m. we have S&P final U.S. services PMI. And at 10 a.m. we have ISM services. On Wednesday, we have no economic calendar, like nothing on the economic calendar. Then on Thursday, pretty eventful day, on November 7th, at 8:30 a.m. we have initial jobless claims. At 10:30 a.m. we have U.S. productivity preliminary. 10 a.m. we have wholesale inventories, and then the big stuff. 2 p.m. we have FOMC interest rate decision, which the market is baking in a 25% rate cut, or a 25 basis points rate cut. And also at 2:30 p.m. we have Fed Chair Jerome Powell press conference, which I will be live streaming this on my channel. So if you want to be notified when I do live stream it, consider following, subscribing. But the market is pretty much anticipating another rate cut to come by in December. Now, if the Fed kind of pivots away from a rate cut again in December, about 25 basis points, that's what the market's baking in. That's almost like fine potentially. The problem is this rate cut that's happening now, if they delay it or essentially say they don't want to do no more rate cuts at the 2 p.m. FOMC interest rate decision making, that could be a little bit rough on the markets because the market is pretty much baking in, like I stated, the 25 basis points, and I think it's about 95% confidence that the Fed will have the rate cut, right? So it could be shaky a little bit. Now, mind you, the election itself could be shaky a little bit as well. Pretty much it depends on who wins the election, right? So it's pretty difficult to 100% understand what will happen after the election. And then plus you have the FOMC meeting right after, right? Well, not right after, but like 2 days after. So pretty eventful week. It's going to be pretty eventful for sure. Then on the Friday, on November 8th, we have 10 a.m. we have consumer sentiment preliminary. 11 a.m. we have Fed Governor Michelle Bowman speak about banking regulation. And at 2:30 p.m. we have St. Louis Fed President Alberto Musalem welcoming remarks. Now, in terms of investor sentiment, right, as of October 30th, 2024, it has become 39.5%, and then 29.6% neutral, and 30.9% bearish. So the bearish sentiment has increased roughly within the week time frame of 10:23 or 10:23 of 2024, and the bullish sentiment has increased as well. So bullish and bearish has somewhat increased. Predominantly still bullish, and then historical view is we are still pretty much more bullish than the historical average and a little bit less bearish than the historical average, but just slightly. And in terms of neutral, obviously it'll be in between. Now, in terms of the Fed interest rate, currently it's sitting at 4.83%. Again, the market is baking in a good chance that we'll see 25 basis points. So we'll see how what the market gets and how it'll end up reacting. Now, in terms of the S&P and NASDAQ and Dow Jones, I do look at the Dow Jones itself. For the S&P and NASDAQ, I look at ETF SPY and ETF QQQ. It's the same thing, just different ratio. The reason why I look at these is because, and I'm showing these, is because these are what I trade. I end up actually trading these predominantly, and I'm more in tuned on how they're moving personally. So first I'm going to look at the ETF QQQ, ETF for NASDAQ. By the way, exact same thing, just different ratio. That's all it is between their actual stuff. So in case you're new to the channel, I've shown this before, but this is quite important because we're at the levels we're at. Basically, we have an upward trend resistance line dating back since 2010, upward trend support level dating back since 2010. Had a difficult time passing it. Mind you, the market was still going up. It doesn't mean that the market wasn't going up. It's just every time it went up, especially you can see predominantly here, goes up, gets knocked down by the upward trend resistance line multiple times, multiple instances. Like you could argue could be coincidence, but it's pretty hard to say it's coincidental sometimes. But either way, breaks through in 2020, I believe, all the way to 2022, bounced off as support as well, came back underneath, and then has had difficult times passing it, but did pass it slightly at one point. So in sometime in March of 2024, went up, tested it, had an issue passing it, went back down, went back up, and then did break it through the all-time highs. So I'll zoom into the 3-month. You can see right about here. So this was the July of 2024. All NASDAQ, S&P, and Dow Jones created the all-time high during this time frame. Now, the NASDAQ is the only one that's kind of strange because the Dow Jones, the S&P did pass the July of 2024 all-time high, but the NASDAQ has not. It's had quite some time or difficulties to pass it. So that was a messed up chart a little bit. Here's more accurate. For some reason, it didn't load incorrectly. So it did break through. You can see this is the upward trend resistance line dating back since 2010. Broke through it in July of 2024, and then came back underneath and had issues passing the 2010 upward trend resistance line. So right about here, back in August of 2024, issues passing it. Here, false breakout. There was a couple of false breakouts though. And mind you, my lines are not perfect, you could argue too. In September of 2024 as well, back in October of 2024, multiple times, false breakouts multiple times, but yet still coming down. And this is where we're at right now. So I'm going to show basically, first of all, we're underneath the upward trend resistance line dating back since 2010. You can see this upward trend resistance line or support level, predominantly support, pretty much lining up where it's kind of causing us issues as well to pass it. But first, I want to show the 5-year chart. This is the 5-year chart, and this is the MACD line. Indicates if we're in a bearish or bullish movement. And for the 5-year chart, not only are we technically look like we're having issues passing 2010 level and then dropping down, but the MACD line is also showing we're in a bearish movement, potentially showing further downside. The 1-year chart, same thing, bearish movement, potentially to further downside. Now, we are approaching the 50-day moving average, and then also the 100-day moving average. So these could pretty much apply some support for us, and we might not break through fully. Like for example, we'll bounce off them as a support level and then go up to the upside. The thing is though, it's weird for this week because this week with the election plus the Fed interest rate, depends on if they like sound hawkish or dovish. It's like if the market gets the president that they want, and then in terms of the market gets what they expect in terms of Fed rate cuts, plus the Fed indicates further rate cuts and stuff like that, and the market's satisfied, then these levels could be predominantly a quick bounce off, or not even, we could just bounce off of these levels and just skyrocket to the upside if the market doesn't get it. And this seems like common sense, but it's just reiterating just to make sure it's clear that if the market gets disappointed, then we could start dropping down and then have to rely on these support levels, right? I'm just showing the trajectory right now as it stands. And then the 6-month, the reason why I want to show the 6-month is more predominantly for this upward trend support level that has been acting as resistant and is more prevalent in the 3-month as well. The 3-month right about here, you can see a couple times bouncing off, like rejected a bunch of times, constantly getting rejected by the upward trend resistance line, and the indications is showing potentially further downside. Now again, the results of the election plus the Fed interest rate cuts, these all could reverse to the upside regardless of these indications to the downside. There's that. Now for the S&P 500, I'm going to be looking at ETF SPY, ETF for the S&P 500. Again, the same thing, just different ratio. That's all it is. It has the same thing, the upward trend resistance line dating back since 2010. Now for the S&P, it's a little bit different. There was no time that it actually passed it. Maybe you could argue if you zoom in on all stuff, a couple of false breakouts, but nothing like the NASDAQ. So we have an upward trend support level as well in the midway zone. Well, not midway zone. This is the predominant upward trend support level, the strongest one out of all of it. And then we have a major upward trend support level. Hopefully I said support level, by the way, not resistance. Upward trend support level for the mid zone right here. An upward trend support level as well for this bottom level. The only thing is though, this upward trend support level, it only has 2 touch points. So we won't know if this upward trend support level will actually act as a major upward trend support level until we see a major crash, right? These were pretty heavy hitter crashes. And when the third one comes, hopefully we actually do bounce off this and you can make some money entering at that level. And hopefully it actually does bounce up to the upside at the base of that level, right? But in the meantime, we're in the mid zone of these 2 levels right here, upward trend resistance, upward trend support level, and we still have more room to grow to the upside. The only thing is though, just like the NASDAQ, the 5-year chart MACD line indicating potential, we're in the bearish movement, indicating potential further downside potential, and then the 1-year chart MACD line as well, and we're on the 50-day moving average. So like I showed for the NASDAQ, same thing. Now we are on the 50-day moving average as opposed to being close to it. And again, we could bounce off it based off the election results, based off Fed interest rate decisions that they come out on the Thursday, I believe it was, if I'm not mistaken, and then plus the further guidance that they're going to give, or not guidance, but like in terms of how they speak in terms of narrating what they will be doing in the future, right? And then the 6 month, nothing really to look at, pretty much just indication further potential downside potential, but we're approaching this level zone right about here where we could have, for example, potential support on this upward trend resistance, or not upward trend, but resistance, horizontal resistance level. But we'll see. We'll have to assess it as we're going by. I would further look at the 1 year and the 5 year chart. The fact that we're on the downward trend potentially for the 5 year, and the 1 year potentially ready to bounce off the 50-day, and then maybe if we go lower to the 100-day, I would disregard the 100-day. I would more look at these levels later on. But when we get there, we'll get there and we'll assess it. And if you're curious what this level is, S&P closed at $569.81. And this level right about here, give or take, is about $563.33, give or take, around that zone, right? I would say probably more rely on the 560, just because if it's a quick drop, it would probably bounce off a clean number. Now for the Dow Jones, almost showing the same thing as the NASDAQ and S&P for the 5 year and 1 year. And then I just want to show the zoomed out zone. So this is where we're at right now. It's a little bit different than NASDAQ and S&P in terms of the upward trend resistance line, support levels, and all that stuff. But if we zoom in, we could see we created all-time high right about here and heading down, which is the same as the S&P, by the way, a little bit. Not exactly, but I just want to show for the S&P, we were at the all-time high as well, even though it doesn't look like it when I was closer. But right about here, go to the 6 month, we're retracting from the all-time high zone. So those 1 year and 5 year kind of, to me, is showing a potential downside. Again, it could be all flipped by the election results and the Fed interest rate cuts, right? So 5 year showing further potential downside because it crossed over to the bearish movement recently. You can see that red tick right now, right about here. Plus we've been dropping recently. And then the 1 year chart, same thing. The only thing is, though, this one's a little bit more strong. Well, depends. You could argue it's in the zone of the 50-day moving average. If we have a further breakdown, then I think it would pretty much confirm that we're heading down further. The only thing is, though, again, once I just want to make it clear, this week is election week plus the Fed interest rate cut. So these things could all be reversed if the market gets what it wants in both aspects, if that makes sense, right? So we are in a zone to basically bounce on all of them for the most part. We are not fully committed, even though these MACD lines are pretty strong, I would say, for the most part, right? There's that. And then last thing I want to show is the VIX. The VIX is a volatility index, basically showing option contracts in the future and all stuff, et cetera, et cetera. Like in terms, it's basically sentiment, and it's still relatively low historically, I would say, in my opinion. By the way, this is all just my opinion. Please do your own due diligence and research before buying and selling. Not a professional, but you can see the volatility index has been rising, right? So back in June, it was around roughly about 12 to like 14, give or take. And it's been rising, and now we're at 21. It's not necessarily high still, like it's not in the higher zones, but it has been rising. So as the volatility increases, the markets could be tend to get pulled down at times here and there. Just want you guys to be aware of that. And that's basically it for today's video. Again, I will be posting these videos weekly, and I'm planning to, for the most part, and I'm pretty sure I will, on the weekends. So that way you guys get updated before the Monday trading day and then all the way throughout the Friday. And then also at the same time, I will be starting off the day trading challenge. Again, if you want to be notified when I do upload that video and have like basically just follow my progress, that will be posted hopefully by the Monday. But consider following and subscribing to be notified when I do. Thanks again for watching. Appreciate it. Take care. God bless and peace.